Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstart video for the week starting and for the day starting, actually, April 29, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. Dollar versus yen is the one that's of interest today after intervention by the Bank of Japan. Let's take a look at what that action did to that currency pair from a technical perspective. But first, let's start with the euro versus US dollar. I'm looking at the hourly chart of this currency pair, and we saw the price action move sharply to the downside on Friday, and that move to the downside came in and found support near this swing area through here, where we had a number of different swing lows and swing highs coming in place in between this area, with price moving above and below. But a lot of the price action did find support in this area, including last week's trading this low right here on Tuesday. Found early buyers against the level, moved higher, and then came down to the level on Wednesday. Found support against the 100-hour moving average on Thursday. On Friday, the price fell below that level, but found support buyers against the lower moving average, the 200-hour moving average, and rotated back to the upside, closing right near the 100-hour moving average on the day. And trading here today in the Asian session, the price did move higher. And that in that move, it went up and tested this swing area between 1.0722 and 1.07314. That was short of the 50% retracement level and rotated back to the downside. We did break back below the 100-hour moving average, but the price is back since moved back above that level, also above the 38.2% retracement. So this level is going to be our support level to start the trading day, somewhere around the 1.0709, as long as the price can remain above that level, and we're just above it at 1.07133. So there's not a lot of wiggle room here, folks. But what buyers are hoping for, that with this sort of tilt to the upside here, and the sellers have their opportunity below the 100-hour moving average here, maybe the buyers are making a play here with the lower US dollar. We are seeing yields move lower in the US with the 10-year down about 3.3 basis points. It's near the middle of the trading range, so I can't necessarily say that we're extending much to the downside. But nevertheless, you get my idea from a technical perspective. If the 100-hour moving average does hold, then we should see, or we will see, the price move higher. If we get above the 31 level, then we start to target the 50% retracement level right here at 1.07425. Let's take a look at the dollar versus yen, and this currency pair certainly has its fireworks. The price on Friday closed right around the 157.91 level, 158 level on the Asian session. Despite Japan being on holiday, speculators came in and pushed the price sharply to the upside and above the 160 level for the first time since 1990. By the way, the 1990 high came in at 160.40. That's this high right here that came in the month of April. So April high of 160.40. Prior to that, if we were to break above that level, we'd be trading at the highest level since 1986. So that's a big 4 years. It's a key level on the top side, and you can see how close we got. We got to 160.20 before the market started to rotate down. So we got rotate down. There's talk of intervention in the market where the price quickly moved all the way down toward the 155.20 level. That was near the 200-hour moving average. Had the corrective move to the upside, which took the price up to a high of 157.23, and then rotated back to the downside, breaking below the 200-hour moving average with momentum this time. But the 61.8% retracement seemed to have been a level of interest from the market, as did these lows right through here. And the price since has rotated back to the upside. We are back above the 100-hour moving average, which is going to be a barometer, but certainly the volatility has increased in this currency pair. The broken 38.2 of this move up. This is the April trading range, by the way, comes in at 156.61, and that level will be of interest on the top side as a target to get to and through. Admittedly, we've been above these levels. We've been below these levels right here. But when the market starts to settle in, we start to look at these levels for the market to sort of pay attention to it. The volatility, it's hard to stop volatility, but the 200-hour moving average did a pretty decent job right here. But then things started to extend and get more volatile on things like this break right here and things like this break back above here. So what we look for is some sort of clues from the market where the market's saying, all right, I like I like the buy side. I'll buy against the 100-hour moving average, or I want to push the price below that level. Conversely, they might say, oh, well, let's get back above 38.2% retracement. It does, and we should move higher. So be aware of this level and this level. Those are the close levels, and we'll see how they react, how the market reacts to those levels. Does the market start to use them as support levels, resistance levels, levels where if it's broken, we get more momentum? Get the idea? Good. All right, let's take a look at the sterling versus U.S. dollar next. And like the euro versus U.S. dollar, we saw the price move higher in the Asian session. And in the process, we moved to new highs going back to this day right here. This is back to April 12th and got closer to this next target, including the 200-day moving average and also the 61.8% retracement of the 2000 or the April trading range. That level comes at 1.2551, and the 200-day moving average is just a little above that at 55. Then the price have rotated back to the downside and found support buyers near the 50% retracement, near the 100-bar moving average on the 4-hour chart, and that's where we sit. So we've defined more or less the barometers for this currency pair. On the top side, the retracement level on the moving average. On the bottom side, the retracement level on the moving average, and it's either going to need to get above the 125.55 level or below the 125-ish type level on the downside to tilt the bias in the direction of that move. So there you have it. A look at 3 of the major currency pairs to kickstart your trading for this week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.